Hi there, traders. This is Chris Keene, and this is the weekend wrap. We had a relatively tame week of trading as most of the majors drifted sideways and finished the week basically where they started. The exception to the rule, though, was the USD JPY. As you can see, or just the yen pairs in general, you can see that the yen shot up aggressively last week, and this was due to the fact that the Prime Minister of Japan called for a new election to be held on December 16th to basically dissolve the House of Representatives. This could lead to a new government that is going to favor additional quantitative easing and could knock the hoping to move the Japanese economy out of basically what has been a 2-decade slump. And what this could do is it could also, if the plan does go through, it'll weaken the yen against most of the majors, and we could see an aggressive move higher. But I would expect now that the initial reaction move is over, because we haven't had the elections yet and so forth, and we could see consolidation in this pair. And what I'm going to look for over the next week is probably consolidation between resistance around 81.85, 81.70 area, and support to be down at the 80.60 level. And I expect the pair to probably remain range bound in this level for the next few weeks. Now, I could be wrong. If we do get a break out of this range and we get a break to the top side more specifically, we could be on our way for a push higher. And if we break above 81.85 and have there maybe a 4-hour candle where we consolidate above, we could be on our way to the 83.20 level and then all the way up to maybe even 84 over the next few weeks. Now, if the pair breaks back below, though, this resistance, the support down at 80.60 will probably just drop back in the old resistance and support zone between where support would be at 79.50, 79.25, and resistance would be back up here at 80.60. So what we're watching is this range right here, and I would expect consolidation so you can play the range, but if we break out and we have the targets there for what we look for on the up and the downside. The next pair we're going to take a look at is the euro, because the euro is interesting because on Tuesday we have the next level of aid that is supposed to be delivered to Greece, and this is probably already priced in. The market will probably handle this relatively smoothly unless there is something that comes out and for some reason the Greece doesn't get the aid, or who knows exactly what could happen. And then we could see a push down lower. But what we're going to see here in the euro is that it's trading in a very tight range, where the top of most of the price action is up here at 127.80 and the bottom is down here at 127. So that's an 80 pip range that the pair basically spent the majority of last weekend, and it's going to take a break of this range the range to get some momentum going. And initially, I thought last week that we were probably going to go down and test the 50 fib at 126, but we couldn't get that done. So what we're going to look at here is that there's a support zone right here between 127 and 126.60, which is a 40 pip range, and any move down into this area could find buyers. But if we break below it, we could definitely be looking for a push down. I'm going to throw this trend line in here just to make it a little more interesting. You can see the pair is basically trending lower, riding this line, and now we can almost see that there's a channel forming in this cross. Let's see right there, and now you can see that the pair. Obviously you can draw those lines better. Now you can see that the pair has tested the top of the range. So what we're going to look through, if we get a break at the bottom of this, we're definitely probably going to go down to the 50 fib area and channel support around 126. And then at that level, we'll have to watch again to see if we get a bounce higher towards the top of the range once again. But so in the midterm, we're going to be watching basically this bottom level. I mean, you could go long if you get down to the 27, but I would definitely look for a chance down to 126 for a bounce, and then maybe a wedge going in there. But that's pure speculation. I have no idea what the price action is going to do. Just if you see that trend, that could be. But if we look, more importantly, if we get a break below this 126, you could definitely go. I would be considering going short, looking for a push down towards the 126 range. Let's take a look at the Great Britain pound, because similar to that pair has just basically consolidated in sideways trading. And once again, it did break below the 50 fib last week and significant support here around the 159.10, 159 level, but it really couldn't gather any momentum to continue pushing lower. And now it's basically started the week almost exactly where it finished, around 158.82. So what we're watching start the week is relatively simple. We have the 50 fib up at 159. We have the 0.618 fib at 158. Just going to be watching the price action in between these levels, bouncing to the top and the bottom, looking for a break of either side. But more likely, I'm going to be just trying to play the range in this pair over the next week, where we're going to have slow volume due to the holidays. So anything up into the 159 level could be a shorting opportunity for a push down to the 158. Anything down to the 158 or even this 158.22 level, which is the lows, could be an opportunity to go long. So in the pound and in the euro, we're just going to be watching the ranges for breaks on either side. Now the Aussie, interestingly enough, broke below the descending trend line that it had last week, ascending trend line, excuse me, last week, and it did move down aggressively. And for keen traders out there, we pretty much timed our sell perfectly. We sold the pair at 102.90 and on Friday, and it did. We closed out our trade at 102.90, and it quickly reversed course. So it was a nice bounce right there. But now we can see that the pair is back up, touching resistance at 103.50. 103.30 was the level we were looking at earlier in the week. So now we're going to see the pairs in this narrow range between 103.50 and 103, and I would expect consolidation in this area. And what we're going to be looking for is a break or hold of this range. If we get a break of the 103, we could be on our way to 102.50, then 102. If we get a break of the 103.50, though, we could probably have resistance right away at the 50 fib again at 103.86, 104 level. So you could play the range here, but more likely I would be looking for, though, with a better risk reward before a break to the downside, because on the top side, if we do break, I would probably wait for it to get to the 50 fib and watch the price action there, see if we get a break or hold. You get a hold there, you could go short back down. You get a break above, you can look for a push back up into the top of the range. So but to start the week off, we're going to be watching the 103.50, 103 level, and then we'll play it from there. All right, the next pair is New Zealand, and there's this pair traded very technically last week, where it consolidated in this bottom range between 81 and 80 for about, it seemed like for days, and now it looks like at the end of the week it did break up, but not when definitely it went down to probably shake out as many shorts as it possibly could by pushing down towards the 80-50 level. It's before it reversed back higher, and it's the nature of the beast in this pair lately. So but what we see here, as long as the pair remains around 81, we could definitely see consolidate. We could see an effort to move higher towards the 82 level. I'm not really concerned about that level anymore. Towards the 82 level is going to be the next level of resistance. So what we're going to see is we still have the support between 81, 80, and we have resistance up at 82. And we're going to look for trading in this range and try to capture as many pips as we can in there. The CAD, on the other hand, boring. That's all you can say about this thing. It's trading in an extremely narrow range between parity and 100.40, which is the 50 fib. We're going to need a break in either way to get things going. We get a break below the parity level. We could probably move back down all the way towards the 98.85 level if we can get some legs on that move. But if we finally break above the 50 fib at 100.40, we could see a move higher towards the 0.68 fib at 10134. That level right there. So what we're going to do is basically just watch this pair for consolidation and look for a break of the range. Maybe look for a break of 99.80 for a push lower. All right, and the yen we've already discussed. Let's take a look at a couple of the yen pairs again that are interesting. Oz JPY, you can see, is sitting right here at the top of trend lines resistance, trend line support, resistance, excuse me, at 84.15. We're gonna need a hold or break of this level to get things pretty. A hold or break of this level is key. There's a good chance that you could go short here looking for a move down lower, but if we do break above it, we could be on our way all the way up to the 85 level. So let's watch this price level, very important, because it would be moving the pair up to, let's see how long this goes back. 1 year. It would now, actually, if we break above this level, it looks like we can definitely move up to the 85 level. But if we get above that, we could be on a race higher to 87. But you can see this has contained the price action since before the beginning of the summer. So it's a very important level, and a move above it could have legs. And definitely, if we can break above that and get up to 85, then we have a lot of hot air below. The CAD is the same exact thing. Look at this; it's testing significant resistance at 81.35, and you can see we've had a test here once, twice. This is going to be the third time. Third time could be a charm for a break higher, but until it does so, it could be an opportunity to go short and look for a break push down towards the bottom of the range again at 79. So we're going to have to watch the price action for the beginning of the weekend, the Aussie and the CAD, to see exactly which way I'm going to be heading on that. New Zealand JPY, you can see it looks like it's in a trend moving higher. Where I would have to wait till it gets to the top of the trend line around 67.12, 12.20, whatever, and see the price action there to see if we get a break back to the bottom of the channel. Euro JPY and Great Britain JPY are really uninspired trades, just similar to its counterparts in the USD crosses, just drifting along. If we could get a reversal here, we could have a nice head and shoulders forming there. But right now, there's really nothing to do in this pair. Just drifting sideways. You can see, I guess, that it moved up, but it moved up with the yen pairs in general over the last 2 days. Same with the Great Britain pound. It is moving up towards significant resistance here at 129.50 area. If it gets up to that level, we'll make a decision at that point what we want to do. So starting the week off, we're going to probably see more consolidation. It's going to be a slow trading week with the Thanksgiving Day holiday on Thursday, but we're going to be watching the ranges in the pound and in the Aussie and New Zealand to see if we can get pops at these different levels, and the CAD for the break of the parity zone here, and we'll keep our eye on the euro and the channel moving lower. All right, everybody, I'm going to probably send these charts out. Some on the general page, but quite a few will be just to the Keen Traders subscription service. If you guys want to join up for a free week where you get weekend updates of all every morning, you get a weekend, you get a daily wrap, that's normally released prior to the U.S. Open, where we go over the pairs and our trading plan, and you also get access to the Twitter feed where we discuss the trades real time as they go in, where I put out my trades and put out any trading suggestions. Give it a shot. It's a 1 week and it's for free. All right, everybody, good luck and have a great weekend.